How's it going, guys? In today's video, I want to go over a new method for valuing Bitcoin I've come across, which uses the stock to flow method, similar to gold and silver, to kind of map out the historic value of Bitcoin and how to project that into the future. So we'll go into that. In a previous, if you haven't already, in a previous video, I actually have gone over how I kind of value a cryptocurrency going between either market cap and fundamental analysis. So if you haven't already, please check out that video. So getting into today's topic, this article is actually from a few months ago, and I actually have just stumbled across it in the last few weeks, and I've read it and I've read it again, and the more I look into it, I think it makes a lot of sense, and I like a lot of the points that the author, 10 trillion USD, you can follow him on Twitter. So basically, it goes into saying that Bitcoin is the first scarce digital object the world has ever seen. It is scarce like gold and silver and can be sent over the internet, radio, or satellite. And this is done by its distributed ledger and secured by its now record 80 quintillion SHA-256 hashes per second. So basically, that's the SHA-256 is the consensus algorithm that kind of keeps the Bitcoin network in check, and those 80 quintillion hashes is the kind of total computational power that's currently now going into the network, which is now a network record. So basically, dictionaries define scarcity as a situation in which something is not easy to find or get. So basically, we can say that Bitcoin has scarcity because it takes a lot of electricity to produce new Bitcoins. Producing Bitcoins cannot be easily faked, which is not similar, which doesn't share the same attributes as something like fiat currency, right? If we think about a lot of the currencies that the central banks, the countries all over the world issue, they can basically issue it at any time. And then now we're seeing that a lot of bonds that countries are offering are negative. So basically you're giving, you're forcing people to invest in something where they're being returned less capital than which they put in, which really doesn't make a lot of sense. So it's different to fiat in that sense. And then it's also, and Bitcoin is different to other altcoins, which some don't have max cap, which Bitcoin does. There will only ever be 21 million. As of right now, some coins are moving to a proof of stake system, but that's yet to be, I think, proven in the real world. They claim that mathematically it's as secure as Bitcoin, but currently Bitcoin has 10 years of operational kind of uptime. And as well, some other coins which do use proof of work don't have as high of a hash rate, which makes them susceptible to 51% attacks. So so now that we've defined that kind of Bitcoin does have this kind of digital scarcity, surely this digital scarcity has value, but how much? So in this article, they try and quantify scarcity using a stock to flow model for Bitcoin's value. So basically, scarcity can be quantified by stock overflow. This equation, stock overflow, and in this equation, stock is the size of the existing stockpile or reserves. So if we use gold as an example, the stock of gold would basically be all of the gold that is above ground that's already been mined, and then the flow is the additional gold that can be mined annually, so the annual inflation rate. And when you divide the two, that gets you your SF score. And so similarly to Bitcoin, the stock would be all of the coins, which I think roughly at this point are about 17.5 million, which have already been mined. And then the flow would be the annual inflation of mined coins, which, as we know, going into next spring, I think May 2020 is the next projected halving. Basically, that supply gets cut in half. So that flow will be cut in half. So when we look at this chart that the article has, gold has the highest SF score at 62. So pretty much what that means is it takes 62 years of production to get the current stock of gold. Silver is second in this chart with 22. So pretty much this high SF score is what drives them and what has historically made gold and silver monetary goods. That's the intrinsic nature of these elements, right? Since it's very hard to get more gold, and and it's hard to get more silver, but it's easier in relation to gold to get silver. So that's why silver is priced less than gold, right? Because you can get more silver per year. So you can inflate the supply of silver more readily than you can inflate the supply of gold. So where it gets interesting though is that this analysis, Bitcoin, since Bitcoin has currently a stock of 17.5 million, and then an annual supply rate of 7 million per year, we get a score of 25. So it's right around silver. So in another chart here, they fit a market cap or total market value of gold, silver, and Bitcoin over time as a relation to their stock to flow value. So they fit it along a linear regression, and so the black line that cuts across the screen is basically, when you take into account all of these things, what is the line that kind of cuts across, that basically cuts across through them to be the best fitting line, right? And then the dots themselves are the actual points and how far they're deviating. So it seems like they're more or less in correlation with this over time. So basically what it's saying that is that over the course of time, as supply... How's it going, guys? In today's video, I want to go over of the underlying asset is being altered. It's following a specific stock to flow regression chart, if that makes sense. So like, if it ever gets more and more difficult to mine silver, we would expect that the silver market cap would follow its stock to flow, would find it on the x-axis here, and then its price would be valued at that specific market cap where it meets around this black linear regression line. So we could kind of, and then we know how much silver is above ground, and we would be able to kind of work our way backwards in terms of the value of silver. Well, since we know, but we can't do that for silver, obviously, right? We don't just know that the supply of silver is just going to be cut in half. Well, we know that about Bitcoin. So currently, at its current stock to flow ratio on this map, basically the green dots show where we currently are, and we get basically where we're at 25, and it pretty much very closely predicts where we're at market cap. So since we know next year the supply gets cut in half, this article pretty much makes the argument that the predicted market cap for Bitcoin after the May 2020 halving is going to be $55,000, considering that the SF ratio will go from 25 to 50. And one last point that the article makes is a power law relationship that is seen within the Bitcoin halving and the Bitcoin price. So basically, a power law is a relationship in which a relative change in one quantity gives rise to a proportional relative change in the other quantity, independent of the initial size of those quantities. So it sounds a little, when you hear that sounds a little confusing, but basically when you break it down, it means that every halving, the Bitcoin stock to flow ratio doubles, right? Because you're cutting the supply in half, and the market cap increases by 10. So, but the interesting part is that this relationship is seen over time, no matter how big the market cap of Bitcoin goes. So you can think of how fast we could maybe potentially, if this law continues, and they point out that the power law would predict that, would also confirm that we would expect to see a price of 55,000 by this upcoming May 2020 halving. So really interesting stuff. I had never seen Bitcoin. I know a lot of the times we see that Bitcoin is compared to gold, and it's compared to gold from the scarcity aspect, right? Like just from the simple fact that it can't be altered with in terms of the finite supply, right? It's built into the code that there will only ever be 21 million. So the fact that there's a finite supply and you can only mine so much, it shares in gold's value similarly like that. But this is the first kind of article I've seen in a really very analytical way look into the correlation over time of gold's price, of silver's price, and of Bitcoin's price. And it seems like over time, the ratios have these ratios have mapped well towards each other. And I think one last point I'll make into this, it doesn't necessarily go into the article about this, but this is kind of my own personal feelings about this, is that I view the cryptocurrency market as very price reflexive, right? There's this theory of price reflexivity that says it's kind of like a feedback loop. If the market thinks one thing, and then they kind of reinforce those beliefs, and then that causes the price to go further and further up. And as we see the kind of global instability coming up, and as we approach this block halvening, you just kind of, it's just interesting to maybe take note of maybe the confluence of events that might be happening all at the same time. So at the same time where we're going to have a price shock, and that all of the historical price metrics would tell you that going into this thing, just take out every other factor, right? Every other market externality. You would say that based on what's happened in the past, you could reasonably project out into the future, this is going to happen. And then if you look out into the economic landscape of what's going on, it seems really, really, really interesting, kind of what's going to, what might happen going into the future. So I hope you guys have found this interesting. I know I found the article interesting. I'll link it down below for anyone who hasn't read it. Please let me know what you guys think, if whether or not you agree with this article, whether or not there's any other sort of analysis you've seen that's around. I'd love to read it and check it out. So please comment, like the video if you find it interesting, helpful, and have a good one, and I'll see you guys.